In a climate where cryptocurrencies continue to face regulatory scrutiny and market volatility, Binance CEO Changpeng Zhao has emerged as a vocal advocate for the crypto industry. Recently, Zhao expressed his admiration for former President Donald Trump, deeming him fantastic for the cryptocurrency sector. This endorsement comes at a time when Binance is working diligently to restore its reputation following a series of legal challenges and regulatory investigations. Zhao's comments about Trump reflect a broader sentiment within the crypto community that views political engagement as a potential pathway to more favorable regulatory outcomes. During a recent interview, Zhao stated Trump's administration had a pragmatic approach toward technology and innovation which benefited the crypto ecosystem. His remarks highlight a desire for political allies who understand and support the decentralized finance landscape. Amidst Binance's efforts to navigate the turbulent waters of regulatory compliance, the company is also reportedly preparing for a public offering (IPO). The implications of such a move are significant not only for Binance but for the broader cryptocurrency market, which has seen a number of companies delay or withdraw their IPO plans in the face of uncertainty. Zhao remains optimistic about the potential for Binance to lead the charge in legitimizing cryptocurrencies and fostering broader acceptance within traditional financial systems. However, the road to redemption is fraught with challenges. The crypto space is still grappling with sensationalist narratives that often exaggerate risks and undermine public trust. As highlighted in a recent Cointelegraph analysis, misleading information can stifle innovation and trigger overreactions from both regulators and investors. Zhao's focus on transparency and engagement with lawmakers is a strategic effort to counter these narratives and build a more informed discourse around cryptocurrency. In another significant development, Ripple Labs recently celebrated a legal victory against the U.S. Securities and Exchange Commission (SEC) regarding its XRP token, urging the SEC to return to first principles in its approach to cryptocurrency regulation. This ruling marks a pivotal moment for Ripple and could set a precedent for other crypto entities facing similar scrutiny. Ripple's successful defense against the SEC's claims has been seen as a win not just for the company but for the entire industry, further emphasizing the need for regulatory clarity. As the cryptocurrency landscape continues to evolve, stakeholders are keenly watching how these developments will shape the future of digital assets. With Binance positioning itself for an IPO and Ripple challenging regulatory norms, the next phase for the crypto industry could hinge on how effectively these companies can navigate legal hurdles while simultaneously advocating for a more constructive regulatory environment. The confluence of political support, legal victories, and strategic corporate maneuvers could ultimately redefine the trajectory of cryptocurrency in the coming years as industry leaders like Zhao and Ripple's executives strive to foster an ecosystem that balances innovation with compliance. The outcome of these efforts will be pivotal in determining whether cryptocurrencies can transition from a speculative asset class to a cornerstone of modern finance. In a significant turn of events for the cryptocurrency market, recent developments have set the stage for a potential surge in Bitcoin prices, drawing attention from both seasoned investors and financial institutions. On March 23, 2025, a warning from the Federal Reserve regarding economic conditions catalyzed a bold prediction from BlackRock, one of the world's largest asset management firms, which now anticipates Bitcoin prices could skyrocket as high as $100,000. Such a prediction underscores the growing influence of institutional players in the volatile cryptocurrency market. The Fed's cautionary stance, which hints at potential economic turbulence, has led many investors to seek alternative assets, with Bitcoin being a prime candidate. BlackRock's analysts noted that the cryptocurrency could act as a hedge against inflation and systemic risks, particularly as traditional markets exhibit signs of uncertainty. Bitcoin's status as digital gold continues to gain traction among institutional investors, stated a BlackRock spokesperson, emphasizing the asset's appeal in tumultuous economic times. However, while optimism abounds, experts caution that Bitcoin must maintain a critical price threshold to prevent a downturn. Analysts suggest that closing above $85,000 on a weekly basis is essential to stave off a potential correction to $76. 000. This technical analysis reflects a growing sophistication in how investors are approaching Bitcoin, recognizing the importance of price levels in determining market sentiment. A failure to hold above the $85,000 mark could lead to a sell-off, reinforcing the cryptocurrency's notorious volatility. Adding to the intriguing landscape is the recent activity of a long-dormant Bitcoin wallet that had lain inactive for 8 years. This wallet awakened to transfer over $250 million worth of Bitcoin, sending ripples through the market as analysts speculate on the motivations behind such a significant movement. The awakening of a Bitcoin whale often leads to speculation and can influence market dynamics, noted a cryptocurrency analyst. Such events tend to spark discussions about the potential for price fluctuations as these large holders decide to re-enter the market. Furthermore, Bitcoin adoption continues to expand in global markets. A Hong Kong-based firm recently disclosed that it now holds nearly 19 BTC, illustrating a growing trend among businesses to integrate cryptocurrency into their financial strategies. This gradual institutional adoption is a critical component driving Bitcoin's legitimacy and acceptance as a mainstream asset class. As the market braces for potential shifts, the interplay between institutional confidence and the underlying economic landscape will likely dictate Bitcoin's trajectory in the coming weeks. Investors are keenly monitoring Bitcoin's performance as it approaches crucial price levels, while the influence of major players like BlackRock serves to bolster the cryptocurrency's visibility. Looking ahead, the convergence of institutional investment, technological advancements, and macroeconomic factors suggests that Bitcoin and the broader cryptocurrency market are entering a pivotal phase. As regulatory dialogues continue and more firms explore the integration of blockchain technology, the next chapter in the evolution of digital currencies promises to be both dynamic and transformative. Investors and analysts alike will be watching closely to see if Bitcoin can not only weather economic storms but thrive amid them, potentially reshaping the financial landscape for years to come. In a move that has sent ripples through the cryptocurrency market, former President Donald Trump has publicly endorsed Trump Coin via his social media platform Truth Social. This announcement, made on March 23, 2025, has led to an immediate 10% surge in the token's value, reigniting discussions about the intersection of politics and digital currencies. The endorsement highlights the growing influence of political figures in the cryptosphere, reflecting how endorsements can significantly impact market dynamics. The rise of Trump Coin can be attributed to both its branding and the political capital associated with Trump's name. As cryptocurrencies with celebrity backing have demonstrated in the past, the combination of social media influence and public persona can lead to rapid appreciation in token value. This endorsement is a clear indication of how political narratives can intertwine with financial instruments, said a cryptocurrency analyst from Crypto Briefing. As we have seen with other memecoins, the volatility is often driven by social media sentiment and public endorsements. However, the endorsement has not arrived without scrutiny. Critics argue that the volatility surrounding Trump Coin is emblematic of the broader risks associated with memecoins and speculative trading. A recent analysis by Crypto Times suggests that the market may be reaching a saturation point with such tokens, warning that the exuberance could lead to significant downturns similar to those seen in the past. If the interest wanes or if a major market correction occurs, Trump Coin could experience a sharp decline, noted an economist specializing in cryptocurrencies. Adding to the discourse, other prominent figures in the cryptocurrency sector have weighed in. Notably, Peter Schiff, a longtime Bitcoin critic, has used this moment to reiterate his skepticism about cryptocurrencies, arguing that they lack intrinsic value. The hype around tokens like Trump Coin is merely a bubble waiting to burst. People need to be cautious about where they invest, Schiff stated in a recent interview. As the cryptocurrency landscape continues to evolve, the implications of Trump's endorsement extend beyond immediate price movements. It raises questions about regulatory scrutiny and the potential for future political endorsements in the crypto space. The financial world is observing closely how this endorsement might influence other tokens and the overall market sentiment towards cryptocurrencies. Looking ahead, the long-term sustainability of Trump coin and similar tokens remains uncertain. While the initial spike in value reflects a moment of excitement, analysts suggest that the true test will come as the market matures. As interest in cryptocurrencies grows, the potential for further endorsements from political figures could reshape the landscape, making it essential for investors to remain vigilant and informed. In conclusion, Trump's endorsement of Trump coin marks a significant moment in the ongoing narrative of cryptocurrencies' relationship with political figures. As market participants navigate these waters, the coming weeks will be crucial in determining whether this surge is a fleeting moment of enthusiasm or the beginning of a more profound acceptance of politically branded cryptocurrencies. The evolving nature of this intersection could have lasting implications for both the crypto market and political engagement in the digital age. In a significant turn of events for the cryptocurrency market, Ethereum is poised for a remarkable resurgence, with predictions suggesting potential gains of up to 65% following what analysts describe as the cycle bottom. This optimistic outlook comes at a time when investment giant BlackRock has reportedly amassed over $1 billion in Ethereum assets, further fueling speculation about the digital asset's trajectory. As of March 23, 2025, Ethereum has successfully reclaimed the $2,000 mark, reflecting a renewed investor confidence and market enthusiasm. The recent surge is not only attributed to BlackRock's substantial investment but also to an overall bullish sentiment in the cryptocurrency space. The implications of this resurgence are profound, as Ethereum's performance often serves as a bellwether for the wider blockchain ecosystem. Market analysts are closely watching Ethereum's movements, especially given its historical correlation with significant market cycles. "We are seeing classic signs of a recovery," noted a leading crypto analyst. The accumulation by major players like BlackRock is a strong signal that institutional interest is ramping up, which could lead to a sustained rally. BlackRock's entry into Ethereum is particularly noteworthy, as the firm has long been seen as a pivotal player in the financial markets. Their decision to allocate over $1 billion to Ethereum reflects not only confidence in the asset but also a strategic pivot towards digital currencies as they seek to diversify their investment portfolio. This move could catalyze further institutional investments, solidifying Ethereum's standing in the financial world. Moreover, recent market dynamics have shown a rally in other cryptocurrencies as well, with projects like Wormhole and Dion experiencing considerable gains, 42% and 30% respectively. This trend speaks to a broader recovery in the crypto market, suggesting that investors are looking beyond Bitcoin and are willing to explore altcoins, many of which are seeing impressive gains. The impact of these developments extends beyond mere price movements. A strong Ethereum could invigorate decentralized finance, DeFi projects, and non-fungible tokens (NFTs), both of which rely heavily on the Ethereum blockchain. As Ethereum's price stabilizes and potentially rises, it could provide the necessary liquidity and confidence for developers and entrepreneurs to innovate within this ecosystem. Looking ahead, the interplay between traditional finance and digital assets will be pivotal. The growing acceptance of cryptocurrencies by institutional investors could lead to more robust regulatory frameworks, which in turn may foster a more secure environment for investment. As the market continues to evolve, all eyes will remain on Ethereum and its ability to maintain momentum in this new landscape. In conclusion, the current surge in Ethereum's value, bolstered by BlackRock's substantial investment, sets the stage for a potentially transformative period in the cryptocurrency market. The upcoming months will be critical as investors and analysts alike seek to decipher the sustainability of this rally and what it means for the future of digital currencies. As the cryptocurrency market continues to evolve, investors are constantly on the lookout for the next big opportunity. Recent developments suggest that a low-cap coin may be poised to mimic the spectacular rise of Solana in 2021, stirring considerable interest among traders and enthusiasts alike. With the backdrop of a recovering market, the coin, often referred to as the new XRP, has garnered attention from holders of established cryptocurrencies like Solana and Dogecoin, leading many to speculate about its potential for explosive growth. On March 23, 2025, reports highlighted how investors are reallocating their resources to capitalize on this altcoin's momentum. As one analyst noted, the current landscape presents a unique opportunity for investors to diversify their portfolios with emerging coins that have the potential for significant returns. This sentiment reflects a broader trend within the crypto community, where seasoned traders are increasingly looking beyond major players to uncover hidden gems that could yield substantial profits. Data from recent market analyses supports this shift. The altcoin in question has demonstrated remarkable resilience and adaptability, capturing the interest of those who remember Solana's meteoric rise. In 2021, Solana's price surged from around $1.50 to an astonishing $200 in a matter of months, largely driven by increased utility and investor confidence. Experts are now drawing parallels between Solana's past and the current trajectory of this low-cap coin, suggesting that it could potentially exceed Solana's previous performance if the right conditions align. In a related development, the Open House Group in Japan announced on March 22, 2025, that it would begin accepting XRP, Solana, and Dogecoin for real estate transactions. This landmark decision not only legitimizes these cryptocurrencies as viable payment options but also signals a growing acceptance of digital assets in mainstream commerce. Analysts believe that such moves could further propel the altcoin's popularity as it gains traction in various sectors beyond just trading platforms. Furthermore, the speculative nature of the crypto market means that price predictions are often subject to rapid fluctuations. Some analysts have set ambitious targets for Solana, forecasting a potential rise to $152, which could have ripple effects on the entire crypto ecosystem. As one market expert put it, if Solana reaches those levels, we could see a domino effect where other altcoins, particularly those with strong community backing and innovative technology, follow suit. As investors remain watchful of these developments, the potential for future growth is significant. The combination of increased adoption, strategic reallocations by seasoned traders, and positive market sentiment may create a fertile ground for the low-cap coin to thrive. The next few months will be crucial in determining whether this altcoin can truly deliver on its promise and become the next star of the crypto market. In conclusion, as the cryptocurrency landscape continues to shift, the emergence of new players is inevitable. Investors are advised to stay informed and consider diversifying their portfolios to include promising altcoins that could replicate the success of established coins like Solana. With the evolving narrative surrounding cryptocurrencies, the market remains dynamic, and those who act swiftly may find themselves at the forefront of the next digital asset revolution.